Welcome back to this Money Control live stream. You're watching Closing Bell and I'm Nandita Khemka. And here is my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, another day in the red, but we really shouldn't be complaining given the kind of tough sessions that we've had over the last few days. Today we've managed to stage a very, very good comeback after, dropping below that 22,800 mark as well. That was the January low and we dipped below that as well. But we made a very good comeback. In fact, if you look at compare today's close from yesterday, it's just about a 26-point cut on the index. Even the broader end of the markets yesterday, both the Nifty mid and small cap indices were down by 3%. In fact, over a matter of sessions, two sessions, they've shaved off 6%. But today, it was almost a 3 to 3.5% kind of recovery on the mid and small cap indices, with the mid cap index also ending largely flat. The advanced decline ratio, I want to mention, in the morning, it was at 1:10, the NSE advanced decline ratio. Then, there was a time when we managed to edge back into the green. That gap was narrowed. Again, towards the in the second half, that gap started widening, but in the end, 2:3, that was the NSE advanced decline ratio. So yes, good news is that there are buyers at lower levels, and we have managed to make a very good comeback from the day's low. Sectorally, Realty continues to see badgering. It was another 3% fall coming in on the Realty pack. Mind you, it is down almost 30% from its all-time highs, entered bear market as well. But Nifty Bank, I want to mention that index because it made a very good recovery, a 750-point recovery from the day's low, ended the day in the green. Aside of that, you had metals making a comeback after two straight sessions of losses. PSU banks as well among gainers today. But what didn't do well aside of Realty were the likes of IT and Pharma. They were among the laggards. And in terms of individual movers, if you see, you'll see a lot of life insurance stocks featuring among the gainers. Bajaj Finserv was there, but SBI Life and HDFC Life, Max Life, Max India, of course, these stocks were doing well because in the new income tax bill, there is no negative as such for insurance companies. They will continue to enjoy preferential treatment when it comes to corporate taxation, 12.5% vis-a-vis. If you look at other companies, they pay a much higher tax rate. But insurance companies, of course, no negatives, so that's a big positive, and which is why the stocks were gaining. You have Shriram Finance that did well, Ultratech Cement, Tata Steel, and some of the other metal names that were among gainers. On the flip side, M&M among the big laggard today. iShares continues its downward move. ITC, Bharat Electronics, Hero Moto Power Grid, and Reliance Industries, these were some of the other laggards. But Yatin, a lot of result reactions playing out, and of course, broader market staged a very good comeback.
Yes, broader markets staged a comeback, and if you look at the Nifty 500, stocks like TVS Supply Chain moved 10% higher. Ashok Leyland, and we'll talk about the numbers in detail, but 8% higher for that stock. SAIL and other metal stocks, including NMDC, did well in trade, almost 4 to 5% gains coming in for those stocks. What did not do well is the like of bear crop, horrible set of numbers. Year on year, steep decline in margins, stock was down 8%. We had stocks like Prestige Estates that continued to fall, and in general, real estate stocks have still remained weak. Prestige Estates down 7%. What was in general, looking weak was, the likes of Renuka Sugar posted a surprise, loss. That stock fell 7%. Ircon, margin shrunk on a year-on-year basis. Stock at 52-week high fell 6% in trade today. So a lot of result reactions and disappointments, especially from the mid-caps. But overall, as Nandita is pointing out, that a day of recovery, mid-caps stage a good recovery from the day's low. I think more than 1,000 points recovery was seen intraday, and similarly Nifty Bank clearly outperformed in trade today. So overall, a healthy trading session, a much required respite, given the fact that for the last 5-6 trading sessions, we are looking at a big massacre in the mid and small cap indices. That's
true. I think carnage when it comes to the broader end of the markets. But I also want to point out, before we move on to our stocks, it was a good comeback by the headline indices, the mid caps as well. And look at the match between India and England. It was a good comeback by Virat Kohli as well. Managed to hit a half century. Didn't quite get there. Didn't really hit a big one, a big century or anything. But fans would take heart from the fact that ahead of the Champions Trophy, Kohli has managed to regain some momentum. 52, not a bad way to come back. But on that note, let's quickly take a look at some of the stocks that are on our radar. Result reactions, Campus Activewear had some spring in its steps today, 7% up. That's because Elara Securities has come out with a note on this particular stock after its third quarter performance, and they've reiterated their accumulate rating on the stock, and the target price has been maintained at 306. Elara says that the company has posted a beat in EBITDA and profit by 39% and 50% respectively. So, good numbers according to Elara, and they've noted the fact that the revenue growth has been fueled by increased penetration, because the company is focusing on new categories, sneakers, women, kids, these are some of the categories it's focusing on, and premiumization as a trend is intact, even though we saw some bit of slowdown in urban consumption demand. So, these are some of the factors that are working well for the company and that have drove the top line growth for the company. In terms of margins, they still have a nominal share of non-BIS inventory, the Bureau of Indian Standards, and there could be further, they have to further liquidate that, and that will impact the margins, EBITDA margins, but that will be meager of somewhere around 20 basis points or thereabouts. So, the deadline to do that is June 2025. So, there could be some bit of a margin, 20 basis point kind of margin impact on that front, but the company has maintained the margin target of 17 to 19% over the long term. They have not really specified a timeline for that, but Elara believes that FY25 EBITDA margin is likely to be at 14.8%. For FY26 and FY27, EBITDA margin is seen at 15.1 and 16.1% respectively. That too because of competitive pressures, because it's this stock or this company operates on the value side, and there are quite a few players there. So, there is a bit of a competition there which could impact the margins as well. And Elara says that the margins are going to recover, but that recovery will happen pretty gradually. They have raised their FY25 EPS estimate by 14%. For FY26 and FY27, they have maintained their current estimates because, of course, the clearance of Bureau of Indian Standards inventory, that is also going to happen. So, aside of that, some of the other factors that according to Elara will work in favor of Campus Activewear, that's the fact that they have launched 69 new styles in third quarter itself. Their selling and advertisement expenditure is normalizing. In fact, they will be making lower provisioning for debtors and inventory, and their distribution network has strengthened across channels. The distribution reach has increased to 25,000 plus retailers versus 23,000 plus retailers back in the second quarter. They've added 6 new stores, exclusive brand outlets on a gross basis, and net store additions stood at 2 during the quarter. So, the total store count is 290 in the third quarter. They are also planning to expand further in the southern region, and they also will be incurring somewhere around 35 crore rupees towards capex in FY25 to add capacity in Haridwar and Ganor factories. Of course, the expansion is aligning with Campus Activewear's long-term strategy. In fact, the key triggers here on for the stock would be reduction in competitive intensity as well as a revival in demand. Don't forget, we've had tax cuts in the budget as well, right? So, that would cushion the fall or cushion the slowness that we have seen in terms of consumption demand, urban consumption demand. So, that could also bode well for the company going forward. If you look at the last 1 month, the stock has managed to give you positive returns of 3% or thereabouts. But let's see, today's a big 7% up move, whether it's actually the reversal of a trend, that we'll have to watch out for. But a lot is riding on how the demand shapes up going forward.
Absolutely, and we'll watch this counter. Was quite strong in terms of listing post the IPO, but we haven't seen much of returns. In fact, the stock has seen a lot of selling post the successful IPO and the listing. So, I think investors who couldn't book profit have got stuck in the counter. But moving to the auto space, Ashok Leyland, that truck maker is in top gear after reporting strong numbers. In fact, the profit saw a jump of nearly 31%, despite the fact that only revenues saw a 2% modest jump. Clearly, the profitability for the company improved significantly, and this is one of those consecutive quarters in which the company has been able to maintain double-digit margins. In fact, the absolute EBITDA was up 8%, and the margins, however, came in at 12.8% versus a level of 12% year-on-year, in line with expectations. But if you look at the absolute numbers, much better than the street expectations, at least on the EBITDA front. Now, if you look at the internals, the gross margins for the company improved 7% year-on-year. EBITDA improved almost 11% in the same period, And most importantly, the company turned cash positive, to the tune of nearly 960 crores to the debt level of nearly 1750 crores at the end of last year, third quarter. So, company has now become cash positive, which is a good thing. Obviously, in a challenging time when the volumes were slightly muted, the company has been able to maintain its EBITDA trajectory. In fact, moving forward, the company hopes that its electric vehicle ventures, the buses orders, the orders from defense will pick up, and overall, the environment post the budget, given the fact that there have been tax cuts, there have been some, good announcement on capex. Probably the truck and buses demand should improve moving forward. So, commentary wise, good commentary for Ashok Leyland, and clearly with the margin surprise, the stock saw almost a 8% uptick in a dull market today.
That's true. I think among the top gainers on the Nifty 500 index today, Ashok Leyland. But the other counter that was under severe pressure at one point in time was Kirloskar Oil. It was down somewhere around 11 to 12%. Yatin staged a good, rebound on the day's low, but still ended lower by about 4% or thereabouts. Numbers weren't all that great. Muted demand, that was the key culprit. Profit came in lower by 20%. Revenue, however, rose by 4.5% or thereabouts. Margin contracted to 10.1% vis-a-vis 11.7% in the same quarter last year. The company has attributed the weakness in numbers to muted demand and multiple other headwinds. The B2B segment, grew only by 3%. The B2C segment, in fact, declined by 14%. On the B2B side, there was muted demand in the power generation business post the switch to transition to emission norms. On the B2C segment as well, they have completed consolidation of 5 plants into one. Now, this is something that impacted production for the company, and which is of course why the numbers were reflecting that. In terms of demand from infrastructure and construction segments, they are pretty strong. But the company has specified that they will be watchful of the trends and how they shape up in the power generation business, because that is where they saw demand being hit. But of course, they have also said that demand is expected to return in the next couple of quarters to earlier levels. So, I think that is something that kind of came as a balm and helped the stock recover a bit from the day's low. The stock per se, Yatin, has been underperforming its sector. In fact, it is also trading below key moving averages. If you look at the stock performance on a YTD basis, it has already shaved off 25%. So, that commentary on demand, and especially in the power generation segment, when that recovers, a lot is riding on that when it comes to any sort of recovery for Kirloskar Oil.
Absolutely. Kirloskar Oil clearly a subdued quarter, and the stock clearly taking a beating. And in general, Nandita, I have seen the mid-cap stocks which have disappointed have seen a big beating in trade, especially over the last 15-20 days. Clearly, investors are taking profits because the stock price to the Realty on numbers is now colluding, and probably in a bear market, the tendency is that a slight bit of disappointment turns into a big selling.
That's true, Yatin, and even for companies that have met expectations, even they have not been spared, Yatin, because the expectations are only so high.
Yes.
But of course, I think with that we've come to the end of this edition of Closing Bell. Important 2 days ahead. Today we saw a good recovery from day's low, but we have the all important meeting between PM Modi and Trump, and what really transpires or what kind of announcements come through when it comes to tariff and trade policies. That will really determine which way we are headed from here. As of now, we'll take heart from the fact that we've managed to defend that 23,000 mark, even on a day when we slipped below that 22,800 mark. But then, thanks a lot for tuning in from me and Yatin. Have a great evening and come back and join in again tomorrow morning at 9 a.m. Thank you.